And welcome to the Ramp Up to Your Retirement podcast with your host, Dan Reese. Dan, good to be with you again, my friend. It's been a while.
Yeah, it has. And we're dealing with frigid weather here in Michigan. So we're happy to be inside doing a podcast recording versus out in the nastiness outdoors. So,
Oh, trust me, the polar vortex has made itself felt everywhere, even here in New Jersey. I had to go out for a physical therapist appointment yesterday morning, and it was minus 3 degrees in New Jersey. So I feel your pain. I know what you're talking about.
yeah, we've been dealing with it for a few days. And we had school out the last couple of days. It was so cold, the kids couldn't even go to school. But
Holy cow. But you guys are used to cold weather, man. Come on.
not this cold, though. This is even beyond us a little bit. So, but yeah, we're super excited today. We're talking to one of our senior wealth planners, Brent Oliver, and we're going to get into something we call back to basics. And as we alluded to in our last podcast, a little bit about kind of taking things bit by bit because financial planning can be overwhelming. And so this month, we're going to talk about the basics that we can just go back to, what do they say in school? Reading, writing, and arithmetic, right?
Yes,
So
exactly.
Brent's going to tell us a little bit about what that is. And one of the great things, we've got this piece that you can get after you listen to the podcast. You can download. And a lot of the things we talk about, you can get in writing in case you missed anything that we discussed.
Beautiful, beautiful. And for those of you who are listening and wonder where you might find this, you'll be directed to it by Dan at the end of the podcast. It's also going to be in the show notes as well. So it'll be really accessible to you. Don't worry if you don't have a pen to write it down now. It's there for you to access later.
For sure. Yep, we'll get that information to you. And all these things that we talk about, you can always find on our website. We've got a tab called Insights. And if you look a little bit, you'll note there's several different things, different informational pieces, resources that you can always get there. So either in the show notes or we'll talk about that at the end, or just go to our website and you'll find those things.
Beautiful.
So we ready to get started? Brent, you ready to answer some questions today?
Yeah, for sure. I think this is a great topic. I mean, you hit on it a little bit with school. I think about it, like we've both coached a little bit. So, Little League baseball takes me back to the basics, so I started coaching when the kids were in T-ball. And so, just knowing what glove, what hand to put your glove on is an accomplishment sometimes. And so, we're going to talk, maybe not at that basic of a level, but it's really important just to get the basics down to make sure you're putting yourself and your family in a good spot to be successful.
Yeah, it sounds good. And for those that don't know Brent's been working with clients for several years. And we actually have a podcast. If you go back, you want to learn more about Brent specifically, we've got a podcast out there where we talked a little bit about his background and some of his beliefs around planning. So that's a really good episode if you didn't get to catch that one yet. But let's jump into this, Brent. So I think the way this is designed is there's several tips, am I right, around planning to try to kind of take it one piece at a time.
Yeah, we're going to go through seeing how we're doing on time, but there's 12 different tips on this pamphlet or whatever you want to call it, this source of information. I think it's really good because we hear all kinds of news in the world, and in our country about how desperate people are and how difficult it is. And although that may be the case, there's a lot of good success stories. And it's not just the people that have huge incomes, right, that are always the ones that are successful. But a lot of times it's just putting yourself in a spot to be successful can make a huge, huge impact. And so we're going to go through these 12 tips, or if we don't get all 12 of them, at least you can download the report, look at it and see how those apply to you and your family.
Yeah, that's great. And I know we talk about all this flood of information out there. So I think it's really nice when you can break it down like this into small pieces. And so you can just focus on actionable items, because that's one thing that I think people get overwhelmed with is hear all this information and maybe it's not totally actionable, right? So then they just throw their hands up and like, okay, I'm not doing that. So yeah, let's jump in. So the first one I know that's on the list is basically to identify and prioritize your goals. So everybody talks about goals. So tell me a little bit about your thoughts on that.
Yeah. So, I think everybody, a lot of times people are like, I don't even know what my goals are. And, a lot of people might have a goal of saving for a child's education or a down payment on a home or retirement. Those are great goals. And it needs to start there, quite honestly. Like, you need to have some big picture goals on what it is you're trying to achieve. And so I would encourage you to do that. You know, if you're single, do that yourself. If you're married and have a family, start thinking about those things, identify, and you need to prioritize, you know, which ones are the most important. But I also think it goes quite a bit beyond that, to be honest with you, because we want to get into, and this is what we do with our clients, is help them understand the type of lives that they want to live, not only today, but tomorrow, right? You know, what are your values? Where do you see yourself in 5 or 10 years? What are you hoping to achieve over those periods of time? And as a matter of fact, we send out a review questionnaire before we do our annual reviews, and those are the things that we talk about in there. Is like, what is going on? What are you hoping to do? Do you have anything coming up in the next 1, 5, or 10 years that you need to plan for? And I think that's really important.
Yeah, I like what you said too, because I think people do forget when they think of goals. Goals can be current goals, like things that, hey, I want to make sure we have one family vacation this year, right? That's an example
Yeah.
that sometimes people
Yeah.
get caught up in these long-term things. Well, you need balance in life, right? And that's part of the certified financial planner approach, right? We want to make sure we're addressing things today and tomorrow.
Yeah, that's well put.
Yeah, so that's great. And so the next one, which I think is good, which it kind of resonated with me a little bit, was maintain a budget at every stage of life. Now, we kind of laugh at that, right? Because, you know, when you're super young, is that really on your mind? And sometimes as you get older, you might be like, I'm done with that stuff. So tell us a little bit about what that means, maintaining that budget at every stage.
Yeah, so I mean, I do think that we get to maybe a certain point in time where like, I don't need a budget anymore. And maybe when you're younger, like you just don't want to deal with it, right? But it is really, really important to have a good, clear idea of, you know, just simply what you have coming in and what you have going out. Because if you don't, it's really difficult to prioritize, you know, your spending. And so this doesn't have to be super complicated, but you know, budgeting is a key part to being financially successful. And so you want to make sure that you're doing that. And that could be as simple as, hey, once a month, let's review what came in, what went out, right? So that we have a good understanding of where our money's coming from and where it's going. And we can look at those trends over a period of time and make sure that, you know, that they're going towards the goals that we've prioritized.
Yeah, I know. I've noticed one thing recently, which I guess it's been around a little while, but on like my credit card at the end of the year, even my bank account, even within the year, it'll show you where you're spending your money, right? So that could be helpful for that.
Yeah, there are other apps that you can use to track spending and do things like that. I mean, obviously you can use a spreadsheet as well, but I like what you're saying, because on a credit card, it's gonna separate that stuff out, and so you'll have a good idea. And there's another part in this report that I thought was really interesting, is just there's always one person usually in a household that monitors the budget. You know, maybe they're the hammer, right? You know, and that no one wants that role, and no one wants to be told either. And so I think even switching that responsibility between spouses could really be helpful, I think, for people to both join in on where the money's going and making sure they understand it.
Yeah, that's great. Great tip. So let's move on to number 3, which I love this one because it kind of goes hand in hand with that a little bit, but evaluate your spending needs versus wants, right? What's that all about?
Yeah, I mean, obviously we all have fixed expenses, you know, housing, food, clothing, you know, medical care, transportation, all those types of things. But then there's other things that aren't necessities, that's just where you want to spend your discretionary income, right? So what other hobbies or interests do you have? And this kind of goes back really to that first tip, is just making sure that you're using the money the way that's in the goals or the priorities that your family has set. And that's why that's so very important.
Yeah, I know I've heard you talk to clients before a little bit about the importance of incorporating your values into that, right? To help make those decisions.
Yeah, because a lot of people really spend money, and we're all guilty. So I'm not going to say that I'm not guilty of it as well, but we spend money on things that really aren't important to us, right? And if you really have a good idea of what your goals are, you can spend the money the way that that you want to spend your money instead of buying something. All of us have gone through a store or made a purchase that we've looked back on and been like, oh my gosh, like, why did I buy that? Right. What am I doing like that? But we all do it. And that's why it's really important to have an idea of what you want to spend your money on and make sure you're prioritizing that in your spending. And the only way you can do that is to have a budget and to track it.
Yep, makes total sense. Now, the next one I think is near and dear to both of us because we both we have been coaches in our lives at different sports and really enjoyed it. But the tip for number 4 is engage a financial coach. What's a financial coach? How's that going to help somebody?
Well, I mean, it's somebody to help keep you accountable, right? And so if you have things that you're doing, this list or whatever it is, pursuing your goals, it's a lot easier if you have somebody else that's going to help keep you accountable. Like we've all heard about workout buddies, right? Like if you don't want to go, say you meet at the gym every morning at 6:00, right? If you're just going by yourself, it's easy to skip. If you have somebody there that's waiting for you, it's a lot harder to do so. And it's the same kind of concept. It's just helping you stay on track over a short and long periods of time.
Yeah, I think that anybody that's had any kind of coach, like whether like I'm a golfer, right? So if things aren't going well, I might go out to get a lesson from a professional and just getting that feedback. I think what you're talking about can be really helpful just to confirm I'm thinking about this with money or that. Well, your financial coach may be able to give you confirmation that may be a good idea or maybe give you some ideas that you hadn't even thought about, right?
Yeah, for sure.
Really good. So tip number 5, which I think goes way back. This is, I think, Dave Ramsey 101. Pay yourself first, right? So talk a little bit about why would you want to do that?
Well, I mean, we just talked a little bit about that as, we've all bought things where it was like, I deserve to buy this for myself. What you really deserve is to make sure that you're putting yourself in a good position for long-term success and that you're spending the money the way that your family wants to spend the money. And so when you save first, instead of going at it from a standpoint of, I'll save whatever's left at the end of the month, you know how that goes. Like you don't have anything left and you never pay yourself and, years go by and you really haven't made any progress. If you really want to treat yourself, get some positive momentum going and allow yourself to have some success and you're going to really see, what you deserve.
Yeah. I love that. I love that. It's getting momentum, right? Get the ball rolling. And you get greedy, don't you? When you start seeing, hey, I'm accumulating some money. I'm actually getting somewhere.
Yeah. Yeah. And I think, all of us have a tendency to, whether it's saving or whether it's exercise or whatever, well, like, oh, next week or at the beginning of the year or whenever I'm going to do that. But the time, if you're not doing it now, if you're not paying yourself first now, start today. Like you can't wait and think that you're going to do that, down the road because, several years will go by and nothing will happen.
Yeah. I just heard something funny recently because, New Year's resolutions, that kind of reminded me of that. I think it's like the second Friday of January. The majority of them have already been broke. Like,
yeah,
that didn't take long.
I think that's, is it an Apple commercial or something? It's like National Quit Day or something like that. I think
Oh yeah, it might have been it.
2 weeks after the new year, National Quit Day. That's kind of sad.
That doesn't take long sometimes. So I love number 6 because I think this is kind of financial planning 101 and a lot of people probably don't think about it that much. But what it has to do with is understanding why today's money is more valuable than tomorrow's. That can be a little confusing, right? It sounds a little confusing. How's today's money is more valuable than tomorrow? What's that mean?
Yeah, I mean, I think, we do this every day, you and I do, and still sometimes we are absolutely blown away by the power of compounding, right? I mean, we'll come into each other's offices at times and be like, look at this. I mean, I know you look at these things all the time, but it's amazing when you start to look at what happens to dollars that are invested today and how much they grow. And that's really what the power of compounding is just allowing your growth to grow, right? And so on the report, it gives an example of this, and then a little rule that we'll talk real briefly about because I think it's kind of fun to do. But in this example is $7,500 invested at one time. So you haven't saved other than this at age 20. And if you had a 7.2% return in 40 years, that $7,500 turns into $120,000. So you haven't saved other years besides the first one, just that one time. And the way you can do this really simply in your head is what's called the rule of 72. And so I think it's fun to know. It's just you take 72 and divide that by the rate of return. And that gives you how long it'll take for it to double. So if you had a 72 divided by, that's where I will use 7.2 in that example, is if you divide 72 by 7.2, it takes 10 years for your money to double. If you had a 9% return, for example, 72 divided by 9 is 8, your money would double in 8 years. So that's kind of how that works. And I think it's fun to kind of look at, okay, I put this money away, when will it double? And you can give yourself a good idea of what happens. It's a cool rule, and it's so powerful, and that's why, you know, it really is. Your money today is worth so much more than in the future because of the power of compounding.
Yeah, it's amazing. It really is when you look at it. It's not the first double, it's the second and third double, right? Where it really starts getting fun.
Yes,
And so
yeah.
no, that's awesome, because I think when you start thinking about buying something and you do some math in your head and you're like, oh, if I could get that 7 or 8% return over time, how much is this really costing me that I'm buying today? Right?
Yeah, exactly.
Yeah.
And that look, that's not to say you can't go out and spend some money and do some things, but you know, when you are buying a boat or a second home, or, you know, all those different types of things, I mean, there's a cost associated with that, and just understanding it and making sure that you're aware of that can be very powerful in helping you make wise decisions.
Yeah. Yeah. That's great. Yep. Number 7 is a good one. Never leave money on the table. Now, we're not talking about tipping. Make sure you tip your servers, right? We want to make sure we take care of people that take care of us.
Yeah.
But what are we talking about there in never leaving money on the table?
Well, I mean, we all think about, you know, the burden of tax, right? And so there's one place where people leave money on the table is just in taking advantage of some of the opportunities that the tax code gives you, right? So by reducing your taxable income, by saving to, you know, 401ks, 403bs, traditional IRAs, or possibly not reducing your taxable income and saving to a Roth, but allowing that money to grow tax-free for the rest of your life is pretty powerful. So there are a lot of opportunities that people miss when they're not paying themselves first, right? When they're not doing it in a systematic and structured way. And so you want to make sure that you're doing that. And then there's, of course, things like employer matches in your 401k or 403b, where a lot of times people aren't taking advantage of those things. So when you're contributing, the employer's putting free money in for you, and you're missing out on those, you want to make sure that you're not leaving that money on the table.
Yeah, that's great advice for sure. Because I mean, I think oftentimes, I think we've talked a lot about this. Oftentimes, it's not one major thing, it's a bunch of little things when you put them all together. When you talk about finances, that really can have major impacts long term. And that's kind of the things what you're referring to there.
Yeah, I think all of these tips are kind of those things. I mean, we're not talking about a lot of things that are super complex, right? But if you're doing these basic things, you're going to be way ahead of the average American household for sure.
Yeah, I agree 100%. So tip number 8 actually confused me a little bit when I saw the title. So I'm hoping you're going to enlighten us on this, but it's diversify your financial life. So talk a little bit about what that means.
We always think of diversification when at least in our field, is just making sure that your investments, that you don't put all your eggs in one basket. And I think that that's true in this case, right? You want to make sure that you are diversified in your investments, but I also think about that you want to be diversified in the places where you put your money. For example, you know, we touched a little bit on it previously, but if you're making sure that you have buckets of money, so maybe some tax deferred accounts like your IRA or your 401k or your 403b, that you have some Roth buckets, and that you have some after tax buckets if you get to a spot where that makes sense for you and your family. You want to make sure that you're diversified because in retirement, that's going to help you control your income, which is going to be super important for taking advantage of some of the tax advantages that are out there, like what we had just talked about.
Yeah, it's funny you bring that up because I know we spend a lot of time with clients on taxes, right, and tax planning. And the more diversified you are, like you spoke with different buckets of money, that taxable bucket, the Roth bucket, the pre-tax, you definitely are at a huge advantage from what we've seen over the years, in making sure that you really can pay the least amount of taxes in retirement. Because sometimes people are pretty surprised at what their tax bill might look like if they don't have that diversification and savings.
Oh yeah. I mean, that's a shocker for a lot of people. Think that they're going to stop working and that they don't have to pay much in taxes anymore. And it's kind of can sometimes, if they've been great savers their whole life, can be the opposite of that, where it's like, oh my gosh, in retirement I'm going to pay more in taxes than I did before, and it happens. So it's something to be aware of.
For sure, for sure. So tip number 9, which I like this one a lot because I think there's some confusion around this. So know your tolerance for risk versus your appetite for risk. So those are two pretty different things, aren't they?
Yeah, I think, your tolerance is what you can actually handle, right? And your appetite is more what you want to handle, right? And so those are two different things. So we talk about just like 3 things that I think would be a good way to begin to look at this and make sure that you're making good decisions with your investments. One is just being honest with how much risk you're really willing to take, right? Because you talk to a lot of people, oh, I know the markets go up and down. I just want an all stock portfolio. But in reality, they wouldn't be able to stomach a downturn of 10 or 20%, and they're invested in things that may drop 30 or 40% or more. Right. And so you have to be honest. And then gets back to diversification of your portfolio would be the second thing you can do in this area, is just making sure that you have more than just one asset class, meaning you don't just own US large companies, for example, that you have some diversification, large and small companies. And then this is the huge one, I think, is number 3 in this, is making investment decisions based on your long-term goals and not on short things that are happening in the world right now. We talk about this some. I mean, we're under a new administration. Some people like that, some people don't, right? And so there's all kinds of research out there that shows that if your side's not in the office right now, you're likely to do worse in the market than people who have their side in, right? And that's because of your emotions, right? And your emotions take over, and they take away from your ability to be successful, and you have to remove that from your investment. So making your decisions based on long term is going to be really, really helpful in that risk, making sure that you have the appropriate amount of risk, and that you're going to be successful long term in investing.
I thought only other people made emotional decisions. Do you mean we do that too?
I think everybody's guilty.
That's my favorite. I don't make emotional decisions. No.
Yeah.
That's the other person. So tip number 10, I heard this tip long ago, and it's such a great piece of advice, although it's very difficult to perform or do sometimes. And is don't finance anything that doesn't appreciate. So you're saying my F-150 doesn't appreciate, Brent?
I don't think so. I mean, I don't know, maybe if you never drove it and kept it for 100 years, but I still don't know if that would appreciate. Maybe it would. But yeah, I think this is great advice, making sure that if you are, buying cars and things like that you're paying cash for them, or that you're taking advantage of like 0 interest loans, if you're going to do that, and pay off your credit cards each month. Don't pay for a vacation that you can't afford and then pay it off over time, because these are the types of things that really, really put you behind. And you just can't do it, right? I mean, there's just not enough dollars a lot of times to go around.
Yeah, no, that's great advice. And then oftentimes people get stuck, right? They I need a new car and I haven't even paid this one off yet. So you're rolling in negative equity into a new car, and it just can get really ugly. So that's really good advice. So number 11, I really like too, because I'm kind of a systems guy, I like systems. So tip number 11 is automate, automate, automate. So talk about that some.
Man, that is great advice. And we're lucky now to have the ability to do this. But what they're talking about is you set up systematic contribution. So 401k is pretty simple, 403b, right? You set it up when you start and you make sure that that's coming out of your paycheck all the time. Make sure you're moving that total, the percentage that you're contributing though each year. If you're not saving, we think you should be saving 15% in there, but you want to make sure that just other savings mechanisms happen automatically, right? So if you're contributing to a Roth, make sure that it's set up automatically, make sure that it's getting invested automatically, that those things are just happening. If you're trying to pay down debt, make sure that the payments to those things are happening automatically. It just is one of those, can't really set it and forget it completely, but it enables you to do that. I'll tell you, with working families, a lot of times I'll do a contribution calculator for the year, and we'll kind of put things on there, what they're saving in their 401k, what they're saving to their Roths, for example. And a lot of times people may say, well, I'll do that at the end of the year if we have the money. And I'll say, well, let's take it off of the sheet then, because if it's not automatically set up and it's going to happen, we can't assume that it's going to happen, right? And a lot of times they'll change their tune on it because everybody wants to save it, but if it's not automated, a lot of times it doesn't happen.
Yeah, that's 100% true. We've both seen that through the years. That's great advice. And the last one I think is a little bit more touchy-feely, but I think has a major impact on families. And that one is adopt a positive attitude about money. So what's your take on that?
Well, I think we self-sabotage a lot of times when it comes to money, and hopefully the things on this list are going to help you not do that, right? Because you're going to have somewhat of a plan, you're going to feel organized, and you're going to be doing these things to put yourself in a good position. And that's good. That's going to help your attitude, right? But a lot of people, even when it comes to this, just don't want to talk about it. They don't. And I think a lot of it's because they're not being successful currently. But if you put these things in place, I think it's a lot easier to have a positive attitude about finance. And look, I get it. I mean, we love doing what we do, right? And so this is an area that we like. But if I had to go in and talk to somebody about chemistry or biology, I'm like, okay, I don't really want to do that. But you don't have to be a professor in this to be successful, is what we're telling you through this podcast today. Is just, if you are doing the basic things, you're going to put yourself in a good position. You're going to know what you're doing, and I think you're going to feel really good about your situation. But it's important to have a positive attitude and feel like the things that you're doing are going to put you in a good spot long term.
Yeah, I agree 100%. I mean, it's like my mom and dad always tried to teach us, hey, if you consistently do the right things, more times than not, you get a good outcome, right? And so I think that's such great advice. And so, Brent, this has been awesome. I really appreciate your input on these things. Like we said, this is available for you. You can download this piece. It's called Back to Basics. Pretty easy read, but it's a good reference piece to kind of remind you of the things that we talked about today. You can get them at our website. You can also download them in the show notes, whatever's easiest for you. And keep in mind, we've got people available in the office. Brent's available to take calls. If you've got questions about these things, you just want to bounce something off of him, he's happy to jump on the phone with you. You can get information on our website, averywealth.com. Phone number is 517-783-1695. Give us a call if you have questions. We'd rather you get some answers from us than maybe Googling it and hoping you get the right answer. So, again, thanks so much. This has been great, Brent.
Yeah, thank you very much. Appreciate it.
Yeah, the credibility of AI has taken a few hits lately. So I would encourage you, if you're listening to this podcast and you have questions, do reach out to Brent and or Dan, as a matter of fact, to get the information or get questions answered. And also, if you've been listening and you're not sure you remember things correctly, remember it's in the show notes. You can also reverse it and listen to it, but it's in the show notes as well. So thank you for being with us. A very interesting conversation, Brent and Dan, and I appreciate it. Simple, basic things make big differences. Those of you who listen to this podcast who don't listen or not subscribe to it, my question to you is why not? That's easy to do. All you have to do is hit the follow button, become a subscriber. That way, every time a new episode of this podcast is dropped, you're notified and you can give it a listen. The other thing I would encourage you to do is if you find this podcast helpful and useful and you think, God, this has got good stuff in it, tell other people about it. Word of mouth promotion is a very effective and a very welcome tool, and we would thank you for it in advance. Until next time, I'm Bill Tucker. On behalf of Dan Reese and everybody at Avery Wealth, thank you for taking the time to listen today. And do remember, please, you can go out today and make today a great day or not. The choice is yours. Until next time. Thank you for listening to Ramp Up Your Retirement. Click the follow button to be notified when new episodes become available. Visit our website at www.averywealth.com or give us a call at 517-783-1695. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Avery Wealth. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.